How does one audit a company's balance sheet while wearing clown shoes? Auditing a company's balance sheet while wearing clown shoes may seem like a silly and unconventional approach, but it can actually bring a lighthearted and playful atmosphere to what can often be a tedious and stressful task. Here's a step-by-step guide on how to effectively audit a company's balance sheet while wearing clown shoes. Step 1. Gather the necessary information and materials. Before beginning the audit, it is important to gather all of the necessary information and materials. This includes the company's financial statements, including the balance sheet, as well as any relevant supporting documents such as bank statements, receipts, and invoices. It is also important to have a good understanding of the company's accounting policies and procedures, as well as any relevant regulations and standards. Step 2. Get into the clown shoe mindset. Wearing clown shoes is not just about making the audit process more entertaining, it's also about shifting your mindset and approach to the task at hand. Putting on the clown shoes is a symbolic act of letting go of any preconceptions or limitations and embracing a playful, open-minded approach. This can help to reduce stress and increase creativity and problem-solving skills. Step 3. Review the company's financial statements. The first step in auditing the balance sheet is to carefully review the company's financial statements. This includes analyzing the assets, liabilities, and equity sections to ensure that they are accurately reflected and in compliance with accounting standards. Look for any discrepancies or inconsistencies, such as missing or duplicate transactions, or transactions that don't make sense. Step 4. Test the accuracy of the information. Once the financial statements have been reviewed, the next step is to test the accuracy of the information. This can be done through various methods such as reviewing supporting documents, performing physical inspections of assets, or sending confirmation requests to third parties such as suppliers or customers. The goal is to ensure that the information in the financial statements is accurate and reliable. Step 5. Reconcile the balance sheet. The final step in auditing the balance sheet is to reconcile it with other financial statements and records. This includes comparing the balance sheet to the income statement, cash flow statement, and other relevant records. The goal is to ensure that the balance sheet accurately reflects the company's financial position and that all transactions are properly accounted for. Step 6. Report the findings. Once the audit is complete, the next step is to report the findings. This should include a detailed report of any discrepancies or irregularities found during the audit process, as well as any recommendations for improvement. The report should be presented in a clear and concise manner, and should be easily understood by both the company and its stakeholders. In conclusion, auditing a company's balance sheet while wearing clown shoes may seem like a novelty, but it can actually bring a fresh perspective and lighthearted approach to the task at hand. By following the steps outlined above, you can effectively audit a company's balance sheet and ensure that the financial statements accurately reflect the company's financial position. So go ahead, put on those clown shoes and have some fun with the audit process.